Good morning or good afternoon, everyone. My name is Karis Alberg, and I will be your host today. I'm excited to introduce our two speakers who together have decades of experience in pathology and laboratory reimbursement. They are going to cover strategies and how to use data to make decisions in order to turn your pathology billing analytics into action. Al Sirmon is the principal owner of Pathology Practice Advisors. After earning his degree, Al began his career in public accounting before moving into healthcare administration as a practice administrator for a large pathology group. He helped launch Pathology Service Associates in 1995, growing it from 5 practices to a national organization. Since 2016, he has led Pathology Practice Advisors, supporting pathology groups nationwide and contributing his expertise through the College of American Pathologists Practice Management Committee. He operates independently with no financial incentives or compensation from billing companies or software vendors. Kurt Mathis brings almost 40 years of experience in laboratory operations, information systems, and revenue cycle management to his role as Senior Vice President of Reengineering and Service at TELCOR. Kurt supports more than 200 revenue cycle customers nationwide, helping streamline workflows and strengthen operational performance. Known for his strategic, collaborative approach, Kurt leads teams through complex challenges and drives improvements that enhance both efficiency and customer success. Kurt, I'm turning it over to you.
Okay, thanks, Karis. Appreciate the introductions there. Welcome, Al. Good to see everybody on the webinar today. Thanks for taking time out of your schedules to join us. Al and I want to cover a pretty good amount of territory here regarding analytics and monitoring. But the first thing I think we need to really get into is really understanding some of the details. How do you detect problems early? How do you verify things like payer performance? And the bottom line, how do you improve collections? And how do you start to distinguish some of those problems between operational issues, software limitations, human process errors? So we're going to dive deeper into all of these items here. Al, I think one of the questions we want to pivot to is, in your experience, why do billing reports vary so much between pathology practices? What's kind of driving the differences that you see?
Well, I believe when we look at both billing companies and also the billing software companies, they represent have a wide range of clients. They may even bill for hospitals or multi-specialty groups or private uh, practice groups. A lot of them specialize in what we refer to as HAP, hospital-affiliated physicians, typically radiology, anesthesia, pathology, ER. And you can see those practices themselves are very different. And then when we come to lab, you have both the clinical lab and the anatomic pathology lab, which is very different. And even within just anatomic pathology practices, we have some practices that are strictly hospital-based. We have some that operate as independent labs. We have some that are a combination of both. And then we also have that little clicker called professional component of clinical lab billing that is very different. So I think just many times the billing companies, they have a wide range of practices, but they don't specialize in one.
That makes a lot of sense. Well, you probably see some disparity across different systems in play too, don't you? What they can produce for standard definitions of reports and really what is standard. Is that true?
Yes, unfortunately, in billing, we don't really have a standard set of reports. If you're in finance or accounting, everybody's familiar with the standard balance sheet and the standard profit and loss statement or income statement. Unfortunately, in billing, you see a wide range of types of reports that are used.
Well, that makes a lot of sense. I mean, all that's going to really lend itself then to some inconsistent visibility really into your AR, things like, if you're not using generally accepted principles, how you're classifying things like bad debt, how do you compute things like net collection percentage or days in AR? If you've got that sort of inconsistency, then I would assume that somebody in your position, when you walk into a practice to provide your services in, you're probably a guy that says, hey, just give me the raw data. Get me what you can so I can compute my own things. Is that a fair statement?
Absolutely, especially in the last 10 years or so when we've gotten such wonderful tools now to use that raw data. But if you don't, if you just take the existing month-end reports that the billing company or the billing software generates each month, that's fine and good. But it always reminds me in the old days, you'd have a consultant come in and they'd look at your month-end reports and they'd say, well, your AR is too high, you need to work it. Well, that's not a lot of direction. The beautiful thing when you have the data we have now, we have the raw data, you can prepare your own reports. And if you look there and you see, well, yeah, your accounts receivable is too high, you got 60 days in AR. But then you can drill down and say, yeah, your accounts receivable is too high. It looks like the problem might be with your Blue Cross Blue Shield. And it looks, if we do get it even further, it looks like you're getting a lot of denials for whatever reason. Maybe your diagnosis code doesn't match your procedure code, which is kind of unusual. So that's the nice thing about it. Now we can not only identify there is a problem, but we can drill down and specifically find what the actual problem is.
Let's look at some of those details that we're referencing here. So I think one of the key takeaways here as we start to get into some of these details is really understanding that these reports are they're not just for billing managers or revenue cycle leaders. They're decision tools for the businesses, for the pathologists, for the practice. These are items that you really want to take to heart so you can then drive the direction of your business and make appropriate business decisions. So Al, on this example we have here, we've got kind of an example of a data dump that you might see. What kinds of things would you like to say about this?
Well, this is just a wonderful report right here. And if you think about it, this is the raw data. And I would imagine that you would also have a column before that service date column, maybe just for your accession number or some identifying number. So you would have every single accession that the lab or practice had for a period of time, as much as a year. And so for each one of those accessions, you have the service date, the date it was posted into the system, the rendering, which pathologist read the case, who was the referring physician, what insurance company they used, the diagnosis of that case, the CPT code and description, whether it's billed professional, technical, or global. Then what I refer to as the financial data, the number of units, how much was charged, how much was just off as a contract adjustment, how much the insurance company paid, how much the patient paid, refunds, and then the remaining balance. So you have the whole cradle to grave right there. You have all the data. Now, this report could be, 200, 300,000 lines long on an Excel worksheet, but that's no problem. So you have all the data right there.
Well, and that sort of financial insight for your pathologists is critical. And kind of the bullet points we have up here too. It's things like, is my payer paying according to contract? Am I getting underpayments? If so, where and why? And if you're using a billing company or you're doing the billing yourselves, it really helps you start to set some benchmarks for performance as well. It's important really for practice to be in the business of receivable management. You have to show all the elements of change in your AR, your net charges, which is your gross charges plus your contractuals, your net collections, which is your gross payments less your refunds, your bad debt, everything that's moving over to bad debt. You may monitor that even further and monitor your bad debt collections. But really that ending AR, what's the delta that you're seeing or that change in AR from where it is currently to what it was at the beginning? So we break this down into a couple different meaningful areas really for billing reports. And the rule one is account for all of the AR movement. Rule two is breaking that data down. So I mentioned some of those things on the prior slide, your beginning AR, the contractuals, payments, adjustments, bad debt, ending. But then the second piece, which Al's going to get into a little bit more detail on, is things like location and place of service. What's the CPT code? Who's the payer? The pathologist, or any combination of these things. I think, Al, one of the things that I think about when I look at this kind of information is if it doesn't reconcile AR from beginning to end, really, what's the risk here? Are there blind spots, write-offs, underpayments? Are those the kinds of things that I'm really, not aware of?
Yeah, that is a risk, and that's scary. And it's not unusual where you'll see some reports where rule number one doesn't balance. And I always say, we're so used to getting our bank statement on our checking account each month. And it's a very simple statement, but it shows your beginning balance, your deposits, your checks, and your ending balance. And if you got your monthly bank statement like that, and you notice that it didn't balance, you would be very upset and very concerned. Did I mispost a deposit, or did I lose a deposit? What happened? It's the same way with your accounts receivable, which, by the way, is probably the biggest asset that any practice has. Many times it's much greater than their cash in the bank. So we want to make sure it does reconcile, because if it doesn't, then where is the difference? Is it more bad debts than they're actually showing you, or is it maybe some payments did not get posted? So that would be a real alarm that you would really need to work very quickly. And the one thing I always do, that previous report you showed, which was the raw data, I have another little column at the end of that that is just a calculation I call OOB, out of balance, where I take that revenue cycle and add my beginning receivables plus my charges minus my contract adjustments payments plus refunds minus bad debt, and it better equal AR. If it doesn't, I want to know. So very important.
So high level, right? You want to see the high level data, and then where you see some sort of discrepancy, you have to be able to drill into the details based on some of these criteria to understand where the offage is. The metrics then that we're going to be taking a look at, it really is going to boil down to things like letting us separate volume problems from process problems, for example. So if I'm looking at a data set of KPIs, whether that's cash, debt, the delta in AR, the days out there, my DSO, and then establishing some benchmarks over there, whether that's an average charge per case or CPT code, average CPTs that I'm actually billing per case, or collections per case, any mix of those metrics, right? It's really important to have benchmarks to begin with, and then monitor those benchmarks over time against your KPIs that are listed here above, because then you can really start to separate volume problems from process problems. So this is one of Al's reports that he really likes here. This is what he calls a trailing 12 months report. Al, how do practices typically use, or if you want to get into it, misuse this report?
And I think you might slip one more slide down to the TTM, I believe. There we go. Yeah, this trailing 12-month report, I usually call it a TTM, trailing 12 months, but many times I run it out for 24 months or even 36 months. But again, you can see it shows that cradle to grave transactions, the beginning AR, charges, contract adjustments, and on to we get ending AR. And then it shows the KPIs and benchmarks for each month. To me, this is my very first report. This is what I use as my control, because I can very quickly look and see for the year what's going on. You can just scan that charge column and you can see, gosh, in April, our charges were down to 1.2 million compared to the previous month of 1.6. That kind of sends a alarm maybe that we got behind in posting in April. But there's a good things that you can follow up on. So this is your, I would say, your very first report you run, because every other report you want to tie back to this. If you're looking at this year period, that you had 17 million in charges and 7 million in payments.
So I think this is where you're saying that curiosity matters, right? Because whatever it is you're seeing may not always be good.
Yeah, it's a again, it's a quick way to see what went on during the month, and then if you see anything that looks unusual, you make a note of it, and that's when you start doing your drill downs with the raw data. You can find out what went on. You could actually look. If you remember on that raw data report, you had two columns there, one for the date of service and one for the date posted. Well, that would answer that question we had about why did we have such a low month in March and April, change in March and April.
And I just went back a slide so folks could see that raw data report. So what this one is showing here is all AR activity, for example, for 12 months. And, you're looking at those monthly comparisons at a glance, and it's really going to help you start to identify trends early. And then Al
Yep.
rolls that information up into this TTM report for a full summary of activity to where you can start to see some of those anomalies and then dive into the detail, which is where we're going to go with the next slide, talking about summaries of activities by CPT code. So what problems does this potentially uncover that overall reports may miss?
I think it's so important that we do break it down by CPT code, and because that's how we get paid, and we have different payment amounts for each one of our insurance companies. Medicare and all the commercial insurance companies pay us differently, so we want to look at our charges, payments, adjustments by CPT code, compute our KPIs for each CPT code, and then we'll usually compute an average collection for CPT. Then that gives you some feeling, hey, are we getting paid what we're supposed to be paid? And there's reports that we drill down where we run by summary of activity by CPT for each individual insurance company. And I think we'll show one of those later on. But that's really what I refer to as reimbursement analysis, where you can see how you're getting paid for each payer for each CPT code. Then compare that to your fee schedule.
In your experience, is that a fairly common finding that you come across, that you are identifying underperforming payers or underpayment trends?
I bet that has been 40 to 50% of my work this past 2 or 3 years, because we see payers not paying according to their contract, paying and for various reasons. Maybe they just have the wrong contract, wrong fee schedule loaded for your practice. For example, we ran into a case where one insurance company had a fee schedule for what they called non-physician providers. And for some reason, when we were doing this analysis, we determined that they were paying us on that fee schedule. And when we brought it to their attention, they said, well, you shouldn't even have that. And we said, well, we agree. But unfortunately, that fee schedule for non-physician providers was 50% of what we should have been paid. If we didn't make the mistake, somehow they started paying us incorrectly, but thank goodness we caught it. But for numerous reasons, we see that we're not getting paid according to contract, or maybe the patient responsibility piece. Now, ever since the Affordable Care Act, we have a much higher patient responsibility piece, and maybe we're not collecting on that piece. So it really, as far as trying to increase our performance, our collections, this report by payer and by CPT is, I think, the most informative.
That makes sense. And I advanced the slide here just because we were kind of dipping into the payer component, but you can see how they're really interrelated, right? So we're
Yes.
trying to determine all of that activity at a CPT level, by a payer level, looking at commercial payers, looking at government plans, looking at your self-pay responsibilities, and looking at all those charges, payments, and adjustments, all the trends, developing the KPI dashboard over all that to really then start to pinpoint some of these issues. Al, I think you and I, when we were talking previously, you just you made the comment that sometimes this is the first place we look when collections disappoint, because this is typically such a common thing that you've come across in your experience.
I would venture to say that 70% of the time, when we feel like we're not getting paid as much as we should be, when we really drill down, it becomes a payer issue, whether it's a denial or maybe, like we said earlier, with they're just paying the wrong amount. But many times it's denials and slow pay. And you might have 200 insurance companies or payers that you deal with. Now we usually sort those in descending order, and maybe the top 20 will represent 80% of your. It's a wonderful report. We refer to this many times as the bad boy report, because if we're looking to see who's the insurance company that's being a bad boy and not paying us, either not paying us timely or the correct amount, or being very aggressive, or what I call trigger happy with the denials.
And I think one of the critical things is just because we're talking about pathology practices here today, specifically, it is really kind of a widespread issue in the laboratory industry at large. So talking about payer, as we pivot here and we start to talk a little bit about location, why does this matter? Or do you see location level issues that are masking some of the total performance sometimes?
Yes, location is very important, but The first reason is, many pathology practices, they split their work. They have the hospital work, but the work for the inpatients and the outpatients, and then they have what we call their outreach work, or the physician's office work, coming from outreach. And I think it's very important to run reports by it, because you may bill differently for those two types. You may bill just the professional piece only for hospital work in an outpatient, but for your outreach, you may bill globally. When I run these reports, I usually run a hospital report by CPT and then an outreach report by CPT. And what I'm looking for there is to make sure I'm following those rules, because we have groups that maybe have 5 or 10 hospitals, and their rules may vary between the hospitals. So you want to make sure that in the hospital setting, if you're supposed to just bill professional only, that's what you're doing. Or if you're in the outreach section, that you are billing globally. Then the other thing where using these reports really kind of helps you with the other managing your whole business, you can look at that outreach work and with your accounting people to make sure, hey, are we making money on this outreach business? We're doing all this work to capture, are we actually making money? And so that becomes very important.
So I'm going to ask a question I think I know the answer to, but looking for your confirmation on it. You've probably come across situations where, when it's the hospital versus outreach, that maybe you identify that, gosh, the hospital has been billing for these CPT codes, but we're actually supposed to be billing, or the practice is supposed to be billing for the CPT codes, or maybe even vice versa. Is that a problem that you come across sometimes?
I've come across it 3 times in the last 2 years, and there's mix-ups, because you have pathology practices that buy the technical for this outreach work from their hospital, and so you're paying your hospital back a fee for the technical piece for this outreach work. You want to make sure that your billing company is billing that globally, not just professional only. And sometimes there's a lack of communication between the hospital, the pathology practice, and the billing company on how they're supposed to bill each one of those. The easy way to do it is run these reports by location, by CPT, and then for each location how are you billing.
That visibility is key. So Al talked, a little bit about this, looking at CPT by location. Is this also maybe another way to catch things like place of service modifier errors?
Yes, yes. I think it's by far, many times you got to be careful. We're talking about software limitations. I have seen billing software companies that they do not, their CPT code is just the 5 digits. Then they have a separate column for the modifier. Well, that modifier may include like your TC for technical, or 26 for professional only, but it also may include other types of modifiers we have. So sometimes you have to work on getting a good report that shows you your CPT of the 5 base codes plus the 2 other codes, either 26 or TC or global. And so you really need to be very careful about that to make sure that you can break down your CPTs, both the main code plus the modifier.
Well, and looking at the last comment here on the slide, the coding consistency check, that's probably really an important area just for regular QA. If you're going to be doing things like self audits, this should be an area that you're looking at with some consistency to make sure that you're catching those kinds of errors, so you don't, exacerbate potentially a small problem into a larger problem.
Exactly. We always talk about, this type of coding check is part of your normal compliance plan. It's one of those 7 elements of a compliance plan where you need to look at your coding. Well, yeah, we want to make sure we're using the 304 instead of the 305 and all that. But also, if you leave off that 26 modifier, you've just doubled your charge. So that's just as important as make sure they put a 305 in there. Did you put a 26 or leave it off? So that's just part of your coding check. This is, I think, a good example of that coding check where we show the top part shows by location hospital, and it breaks it down by CPT. Well, the good thing that gives me comfort here that for the hospital setting, we have a -26 attached to every one of those, the 305-26. So that means we're billing professional only. Then I run that same report by the office location, my outreach work. Usually that drives a place of service 11. And the good news is I look at there and see, hey, my 88305s does not have a 26 or a TC modifier. So that means it's billing globally. And I'm okay there. And it just to make the point, if you look out the very far column to the right, on the hospital location, our 8830526, we're average collection about $45 a unit. We're down in the second location for office. I look at my average collection per 88305 global is $89. So you can see on the reimbursement side, it makes a big difference if you attach that 26 or leave it off. So that's why it's so important. And that we're billing correctly.
So then moving forward is starting to look at referring physician group by location. How can practices, maybe use this report beyond just billing?
Well, this is a wonderful tool. Again, we're talking about using these pathology reports not only just to monitor billing to make sure you're performing and collecting all you can, but also it's just a tremendous amount of practice management information in here. I always get a little bit, remember this report when I first got into the pathology billing business when I was a CPA, then we started working for a pathology practice. And I had one of the pathologists that every holiday she liked to give out gifts to our clients. We had a clinical lab and an anatomic lab. And so she came to me and said, Al, I'd like to have a report. In Florence, South Carolina, I was a big producer of pecans. And she said, we had a local store that sold these very nice pecan baskets. One was 25, one was 50, one was 100. And she said, I got to make the decision who gets what. And so she asked me to run this report. So I ran a report by a referring physician group and descended an order for her and met her need. But after I did that, I said, God, what a wonderful tool. Then we shared it with our marketing people. And then we started doing different variations of it, where our marketing people could see what what their referring groups were doing each month. Sometimes you would find out that you had a referring physician group that was sending you certain CPTs, but not the others. Or they were sending you certain insurance work, but not the others. So it was really an eye opener for us. And that kind of opened the floodgates. And then we started realizing, hey, all this data we have in our billing system is pretty useful, both to our accounting people and also to our marketing people.
Well, so if we pivot then, I know we touched upon this a little bit, but if you're going to look at CPT breakdown by payer, and we got some graphics here in the next slide, some reporting graphics, this is where we start to confirm whether a payer is really paying according to plan or not. We're looking at CPT level collections, the average against your fee, and we're also looking for, that compliance to the contract. Al, how would you use this information?
Again, this is probably what I spend at least 50 to 60% of my time with for my clients. If you look at this report here would be for one payer. Let's just say it's for Blue Cross. So it shows you my top 11 CPT codes, all 11 CPT codes for this practice. It shows by CPT, then it shows all the transactions from charges, beginner receivables charges, all the way across, and then it computes our KPIs. If you think about, all right, this is Blue Cross Blue Shield, and my average collection per CPT for an 8 through 5 global is $140. Well, that's pretty interesting to know. But what if my allowable for Blue Cross Blue Shield for a 305 is 180? Then I said, gosh, I'm averaging 140, but my fee schedule that I have from Blue Cross says 180. Why am I coming up shy? Again, the beautiful thing about having the raw data, you have this on a pivot table. When you make this report, you just double click on that line item for 305 and you have all the transactions. Then you can very easily sort it and you can see the reason that you're not averaging close to the $180 is because maybe you have a whole lot of denials, or maybe you have a lot where you're being paid just the insurance portion and the patients are not paying their responsibility. So then you can really find out what's going on. But when you do this one report for, let's say, your top 5 or 10 payers, then you can have some comfort that you're getting paid according to what that contract is that you sign with each one of these insurance companies. And then it gives you another little piece of information too. Usually I'll take this and I'll drop in the current Medicare allowable for each one of these lines. So
Sure.
I can compare what Blue Cross is doing, how it compares to Medicare. And then, so when you have one of your doctors says, well, how are our payers doing? I can say, well, Blue Cross is paying pretty close to what they said they were going to pay us. And even better, when we compare their fee schedule to Medicare, they're paying us about 300% of Medicare. So it's two ways for us to judge. One, are they paying according to contract? And two, is it a very good contract? If I came back to and said, yeah, they're paying really a good rate, paying according to their contract, unfortunately, their contract is, basically Medicare rates, then it's not such a good deal. But so it's just a great way to analyze your payers.
This is a grid analysis report that you and I have talked about previously too. And it feeds into, again, some of the conversation we've been having. So this is looking at a specific, pathology group, but in a grid analysis, looking at that side-by-side comparison. So you've got some other categories in here. You mentioned the Medicare fee schedule, which you can see is the third column, or the blue, yellow, green, self. Those are other plans, I'm assuming.
Yes, just I didn't want to be specific to any insurance company.
So you can see the value then, as Al was talking about the side-by-side comparison of understanding, how you're stacking up across your payers against self, against your Medicare fee schedule, the allowable amounts, against your CPT codes.
Yeah.
It's really, I know in the title it says a must-have report, but it is so important to be able to do that.
Well, it's amazing though. Many times when I do an audit, and that's one of the first things I'll ask for. Can I have a copy of all your contracts and your fees? And do you have a fee schedule, a grid analysis? And they'll say, yeah, let me call my billing company. You call the billing company and say, yeah, let me call the client. And so then you say, well, but both of them are pointing fingers at each other. Nobody has it. Then the question comes up, well, how do you know you're getting paid correctly if you don't even know what correct is?
Yeah.
And so it's many times then they'll pull their contract and they'll have the contract will say, under fee, it'll say see attached Schedule A, and there is no attached Schedule A. So it really is some housekeeping work that every practice should do. And I would think if I was the pathologist, the practice manager, I'd want this grid analysis in my top drawer at all times, just to see what we're supposed to be getting paid.
How often would you run something like this? Is this something you do weekly, monthly, annually? What's the cadence of that?
I would run the grid analysis at least annually because some of your contracts, certainly your Medicare changes every year, and you might change your prices every now and then. But, sometimes your insurance contracts they may stay the same for 10 years. But I would but then you want to make sure, even though the contract hadn't changed, you want to make sure they're still paying that amount.
So really it's about coming back then to creating a repeatable, monthly, annual discipline, not just a one-time audit. So you bring all these things together then and get the holistic view.
Yes, and I think this is just something we did just to make sure that we were reviewing each month.
Yep.
The way I say it is kind of a 2-point review. Every month you get out, hopefully you're getting your standard reports off your billing company. But if you're not, then you need to do a reimbursement, do a data download and prepare the types of reports you want, those that we just went over. The trailing 24 months, the one by payer, the one by CPT code, the one by location. Get your standard set of reports that you want done, and then have the billing operation prepare those each month and then review them. But at least maybe once a quarter, go in there and do the full data download and audit that. But this little 6-point checklist is just something we use. The first thing I would always do when I get the monthly report is I compare my current month's charges to the average and current month collections to the average. Same thing with year to date. Then you do a little bit of price volume analysis. It's a very simple little computation to do that. Hey, I've got this big increase in charges. Is it due to price? Did I raise my prices? Or is it because we really had true volume growth? Sometimes if you raise your prices in today's environment, it really has no impact on your collections because so many of our contracts are fixed based. And then I'd also look at the current month's collections compared to average, and again the year to date, and look at my KPIs that we talked about earlier, the net collection percentage, the bad debt percentage, the days in AR, and then I'd look at my benchmark. I do that every month with just those standard reports, relying on those reports. But at least once a quarter, I think I would do the data download where you can go back in there and really make sure that those reports are accurate, number one. And number two, if there's any variances, you can drill down and see what the actual problem is.
So the analytics are crucial, but how do you then take that information and turn it into action? We're looking at root cause issues. Is it operational? Is it a software limitation? Is it a human process error? We then need to take the next step of assigning ownership of who's going to follow up and how we're going to follow up. And you want to track that resolution over time. But Al, in your experience, this is kind of common sense, right? Use the analytics, uncover what you need to uncover, what you can uncover. But what's the biggest mistake that you see that practices make after they actually do find a problem?
Um, Probably a lack of follow-up, and because
Mm.
um, we run into such different types of issues. And one thing I would like to point out here when you talk about a software limitation, you don't think that's an issue, but many times that can be. And for example, sometimes you'll run into a situation where the billing company does not post by line item. And what I mean by that is when money comes in, when an account gets paid, in pathology, it's typically maybe on average 2 CPTs per case. So when they send in the amount of money, so much of it will be, let's say, for the 305, and maybe so much of it's for the 8342, the IHC stain. Do they allocate the amount that was actually paid between those two codes by charge amount, or do they actually post the actual amount that actually came in for that? And we've seen that situation where, gosh, you got to be careful with that. You got to make sure that they are posting by line item. So that's an example of a software limitation you'll run into at times. Of course, we all have human process errors, but I think again, if you identify the problems you run into on that, especially when you do the data download and really that deep analytical review, you will identify these types of problems. Then the question is, who's going to correct this? Is it going to be the practice and their staff, or is it going to be the billing company?
What do you typically see if it falls upon the practice and their staff? What level of engagement occurs there? Is that the manager? Are they pulling in some of the other revenue cycle leaders on the team? Does a pathologist get involved? And then they're trying to call the payer, set up a meeting with the payer. How does all that work?
Yeah, and I think it has to be hopefully somewhere on the practice management level. But you bring up a good point, something I think we've gotten away from. You say call the payer. I just ask, how many times, how do we even know who our provider rep is for our major insurance companies anymore? We used to do that a lot more than we do now, but now they've kind of hid behind voicemail, and now they have AI people answering the phones for these payers. And so it's getting tougher, but we really need to have a process. What if we're not getting paid correctly? For that example, when we were getting paid on the non-provider's fee schedule, that issue took us a year to get resolved because we had to go through so many people on the insurance company side to get to the right person, number one, and then for them to make any changes. But if you didn't stay on that and keep monitoring it month by month, I think the insurance companies were just hopeful that we would eventually just get tired and give up on it. You need to really track that over time, make sure they are responding after you point out the problem.
It almost feels like it's the game of how not to pay sometimes when you get into that level of follow up. But you're right. There's kind of a constant shift in how that interaction occurs, and there are additional layers now in place that are, it's gone beyond the press the one or press the two for somebody to assist you to. There's levels of AI interaction you're going through, and it's different from payer to payer. I wanted to take a step back here and talk a little bit about some of those other root causes. When we're talking about operational issues, I think it's important for the folks listening to the webinar today to understand that the operational issue could exist either within your practice, right? And it could be data driven. It could be quality of data, maybe coming into the billing application. Those are always areas to focus on to make sure you're getting as good of data as you can get, quality data for your billing purposes. It could be, like Al said, a limitation of the software. but it could also be an operational issue, maybe on the billing company side, or even within your own billing team members performing that. The scope of where that can lie can be everything from front end types of operational issues, things like checking medical necessity, appropriately coding correctly. It can be everything from responses coming on the back end post claim and inappropriate follow up against that AR. Those are all operational things that can be uncovered by a lot of the data that Al has been bringing forth, especially when you're looking at things like cash, denial trends, et cetera. Then you can take a step back and understand or ask the targeted questions of your billing team. Are you doing these actions when we get these responses? If not, then why not? And let's make sure our SOP reflects the appropriate response we should be taking. But if they're taking the correct actions and there's still a denial, then it's also a case of understanding of, well, am I going to get paid on this or not? And if I'm not going to, what's the next step? And I think that's where we step into the next slide and talk a little bit about patient responsibility. And again, breaking that down by the locations that the services are either being provided by or coming from, the payer segmentation associated to that, and then the patient liability that is at the end of that. Transparency really is going to drive accountability. Al, what are your thoughts on some of the items here on this slide to drive patient responsible collections?
Well, we used to net collection percentage. We used to, as a rule of thumb, say, gosh, we like to see 90% net collection percentage and 10% bad debt. Those two equal 100. So we'll collect 90% and 10% bad debt. Now I think we probably look for 88 and 12. And I think the reason being is because we've seen so much more roll over to patient responsibility. And I'll be honest with you, back in the day when I ran a billing company, we didn't push patient responsibility as much because it wasn't that as big a piece of the pie as it is now. But now it is a big piece of the pie, especially on the deductible side, where we have these, when we came out again with the Affordable Care Act, they had all the metal plans. I think some of the, like the silver plans, had some very high, $6,000 to $10,000 annual deductibles. And so we have to go after the patient responsibility a little bit better. And we need, one of the things I think is found that, hey, have you ever really looked at the statement that your patients get? And is it readable? Is it user friendly? And many times you'll be surprised when you look at that patient statement that you're sending out to these patients. You kind of get an understanding why we're not getting paid so well, because the patient, it's not very, it doesn't explain the situation very well. When if you monitor your phone calls when the patients call in, many times the patients will call in and say, did you file my insurance? Well, you want to say, well, of course we did. If you look at your patient statement, it says we have filed your insurance, but maybe we should have made that more obvious that we did tell them that. So I think there's ways we got to be more patient friendly, both by having good, if they do call in, that we can respond to those questions timely, and also that our patient statements are easy to understand.
That's a great point. Easy to understand, because I think sometimes you run into scenarios, or practices run into scenarios, to where they'll have a patient call and they're not really even aware that services were provided by your practice. They may have been seen for something else and had a test performed, and maybe they were told, but a lot of times there's still a lack of awareness as to why did you send me a bill? So clarity on your statement as to who you are and why they've received the bill is always very helpful. I think another thing that's really key as we continue to move forward into a larger and larger arena of patient liability is simplified ways and mechanisms, technology for your patients to be able to pay. That can be as easy as give me a link to a portal, let me log in and just make a payment. Or if I'm going to have some recurring services, can I set an account up on your portal and just pay on some sort of a recurring basis? Or there are companies out there that also leverage text to pay. So I want to be able to manage that process and make it simple for those folks that have a liability to pay you. Because if you make it difficult, you're going to definitely drive your collections in the wrong way. I want to be cognizant of time here. We're getting really close. We got about 11 minutes left. Some final takeaways here, and then allowing some time for Q&A. Really comes down to control, clarity, and confidence in your billing operations. You want to make sure, again, you have complete AR visibility. You want to break the data down so you can see patterns. You've got to set some established benchmarks so you know how you stack up month over month. And don't assume, right? Trust but verify. You want to make sure you're checking your reimbursement on a regular basis to make sure you're getting paid according to contract. I'm going to stop there. Karis, do we have any questions from the audience that we'd like Al or myself to address?
We sure do. So the first one is, do you have any tips to navigate the different Blue Cross Blue Shield states' jurisdictional guidelines related to pathology, and whether there are differences with the PCTC global split, lab location, place of service related to which Blue Cross Blue Shield the claim should go to for processing?
How do we make sure we're getting the right Blue Cross Blue Shield payer on the claim? That's really the question, right? Al, you want to answer that one?
Real life example, what I do is that usually Blue Cross is one of your top three your payers. Usually it's Medicare and Blue Cross, or sometimes even Blue Cross and Medicare. Usually you'll have a Blue Cross for your area, then you'll have a Blue Cross federal, a Blue Cross state, and maybe 2 or 3 other plans. Unfortunately, a lot of those, sometimes the billing companies just mix them all into one, or you have a hard time pulling out. So for example, when I do that CPT by Blue Cross, that report where it shows my CPTs for Blue Cross, and I come up with my 88,305 average, I'm finding that sometimes that average is not the benchmark I want. I actually pull out my old statistics and go in there and compute the mode, the most frequently occurring number. And then also, so I end up doing a frequency distribution. For my 88,305, there may be the mode, the amount I'm getting paid the most on, maybe it's $120 for an 88,305 global, but also I see a lot of them I'm getting paid at $103 or something like that. Then I find that is another plan. So instead of just doing the average, I'll go off and for Blue Cross, who's usually one of my main payers, I'll do a frequency distribution. So I'll say for Blue Cross, 88,305 pays me these 3 different amounts. 50% of the time they're paying $120, 30% of the time they're paying $83 or whatever. And then maybe I can match those up to those various plans. Ideally, if we had good data that's coming in, that we could break out those 4 or 5 or 6 blue plans separately into a separate line item, but that's not always the case. So you have to go back and do that frequency distribution. But again, if you don't have a raw data, there's no way you'll get that information. I mean, the only way we can do that, in the past, when I was just getting those regular monthly reports, I compute my average and I said, gosh, we're not getting anywhere near that. What's the problem? And usually what the problem is with Blue Cross, we have multiple different plans and we're not breaking them out.
So I'd add on to that and talk about it more from an operations perspective and like a system perspective, is being able to read the trends like Al was talking about and getting, through the raw data, what you're seeing, but then applying that to system logic and allowing, the heavy lift to assign the payer correctly for a Blue Cross Blue Shield, for example, based upon things like rendering or ordering or prefix or client state, patient state, or locality, a zip code sort of functionality. That way you can operationalize and automate from the details that Al's providing to make sure I'm not applying a human resource to make those judgments, but I have a consistent algorithm, if you will, and a consistent process to drive claims out correctly the first time to the right blue.
Okay, and I think this should be a fairly simple question. Can anyone call a payer to get the fee schedule, or does it need to be the person who signed the contract?
We don't usually get the person to sign the contract to call. So many times that's quite an effort. A lot of runaround to get the contract. If you have to call the payer, if you don't have it, the fee schedule attached to the contract you signed, which is not unusual. We run into that every day. But then when you go to the payer to ask them to give you a copy, you have mixed results on that. Sometimes they're pretty prompt with it, and sometimes not so much. Ideally, if they have have it on their their fee schedule on their web, the provider portal or something that you could get
Okay.
it.
I know there's a couple of our RCS team members on here. Maybe if they know some experience, since they probably weren't ones signed the contract, if you wanted to provide any additional information on the chat so that all people could see that, that would be helpful as well. And then I think we've got time for one or two more questions. When using historical analytics compared to current trends, how far back should we look? 6 months, a year, or longer?
Yeah, the great thing about that data download, your average pathology practice, maybe they do 50, 60,000 cases a year. So there's 2 lines per case, 100. So you can go back 4 or 5 years and get it on an Excel worksheet. And you can do some great trend analysis if you have all that data. But I like to go back at least 2 years. Use most of the time when I request a data download, like right now, we just closed out 25. I'll ask for a data download for 24 and 25 combined, and then you can kind of see what's going on. But I have gone back 3.
Kurt, anything on that one?
No, I agree that it's valuable to have the historical component. And again, setting your benchmarks up and then being able to track that over time against what the history shows, I think would also show you where you've managed to make improvements based upon the things that you evaluated over time. And you should see a really positive delta on that.
We go back to the Pecan report. If you can go back 3 years, it's fun to track that charges or payments by referring physician for the last 3 years. And you can see if they've dropped off or if that group has dropped off, maybe 1 or 2 of their physicians within that referring group have gone somewhere else. So it's really great data to use from a management standpoint if you can go back 3 years or so.
Okay. And then the last question, when the data shows a negative reimbursement or denial trend, what's the most effective way to translate those analytics into actionable changes across billing, coding, and provider documentation?
Denials could be a presentation in itself, but yeah, if you're seeing a negative denial trend, which we're seeing now, we're seeing more and more denials. Again, we use the term trigger happy, but if you can break down your denials in your system, what there should be on that data download. If we had room, we could have showed it. There's a column for denied, yes or no. Yes. If it was a yes, then you want the code, and then you can do a lookup table and bring out what that code is and go investigate what those codes mean. And then that's when you want to call your provider rep. Like the one example I gave, I think it was a BO13. It said that the CPT code did not agree with the diagnosis code. And when we looked at it, it was fine. So it was just something wrong the payer had done. But working denials is very important. But you got to know the reason why that case was denied. And so if we have that in our billing system, which we do, when that denial comes in electronically, it shows the code, the reason, remark code, and the denial code. So again, that's just great data to use, because when you go back and do contact your provider or your payer rep, you want to be able to give them specifics. Here is the cases that got denied, we think incorrectly. Tell us why not.
Again, I think it's about identifying what the issue is, right? Because there's denials and there's also rejections. Both of those sometimes get really intermingled with each other. And as long as you're getting eyes on and seeing what those trends are, to Al's point, you can take different actions based upon how that payer's responded. But I need to know what the trend is first. Do I have an issue with submission? Am I including everything I need and all the loops and segments on the claim? That's an easy fix with most software platforms. So if that's the case, I can correct that and get my claims resubmitted. And that's more of a rejection, less of a denial. If they're getting denied based upon contract or something else, I want to have visibility to that, because then it's probably a different group of people I'm going to engage with to try to understand why that's happening and to work with the payer to get, payment where I should be receiving payment according to contract, or if I've got some other issue that it's at least getting uncovered and talked about. But operationally, I want to do course correction, right? If I've got something that is easily configured and changed or worked, or maybe I need to do some eligibility checking up front, those kinds of things. Those are quick hits in most software platforms to be able to then operationalize that for automation and let my people focus on the things that are really needing their attention.
Perfect. That sounds great. Well, we are at top of the hour. So Kurt and Al, thank you so much for providing that information. I hope that all of our attendees found it extremely helpful. Thank you so much, guys, and everyone have a great day.